Right. Okay. Power of Five, Mastering Forex Trading in 5 Easy Steps. We went through the basics last week, the business plan, and you've all submitted your homework. Not. So I say there was 2 out of 82, I think, actually went to the trouble of doing this. You really need to pay attention, guys. This is the reason I went from losing to winning, as I explained. Disclaimer I've just read out. If you're not familiar with me, traded stocks in the 90s, traded Forex funds for clients until I semi-retired in 2020. And I started to focus on crypto and teaching rather than for clients. And that was because we were doing it through Australia at the time. And they wanted me to move my money and clients' money, some of whom 6 figures, one had 7 figures. They wanted us to move to Vanuatu. And I couldn't find it on a map. And therefore, I was not happy to be going to any broker that was in an out-of-the-way place. And that is one of the things you should all consider. I consider Tickmill to be a decent broker and well-regulated. But whatever broker you decide to use, be very careful as to where they are regulated, because if anything goes wrong, you don't want to be somewhere in the middle of nowhere you've never heard of trying to get your money back. And then at the end of this session, so last time I said we would review the top 3 of the attendees' business plans. I say we got 2, so that wasn't very good at all, guys. Today we will do the same for the trading rules. And the trading rules, again, is something that lots of you need to do and you won't do, or you put it off, but it's all part of this business. So these are the things. This is a business and you need to treat it like this. This is Ashley. I showed you Ashley last time. Ashley joined us in 2020 and then he quit his job in 2022 to trade full time. And he now trades and also helps teach with myself at Forex Mentor Pro. So let's get on to the screen now, and we're going to have a quick recap from last time. So for those of you who are members of Forex Mentor Pro, then you will recognize this. If you're not a member, you do not need to be a member. This is not a pitch to join us. I am going to share with you, excuse me, the things that we do inside the website, and you will be able to take screenshots of some of this or watch the video replay from Tickmill. So this is the home page, and within the home page, we have, if you scroll down, you can see we've got lots of different sections. I have one for Forex using my M2 strategy. I have been using it for 20 years. And most people you see in the Forex niche, particularly the marketers, come out with a new strategy every year. I think that's nonsense. And in actual fact, all I've done over the years is take more and more things off, and I just now use a couple of EMAs, and everything else is structure, support and resistance, and Fibonacci, and EMAs and trend lines. That's it. So I take things as simple as possible. The good news is I use exactly the same strategy for stocks and for crypto. Slight difference with stocks and crypto is I look at the fundamentals first, and then I look at the technicals for the entries. And the entries are my edge. And when you talk to a pro trader or anyone that's successful at this game, everybody has an edge. What is it that makes you successful when other people are not? And I am known inside Mentor Pro, the joke within the group is I am spookily accurate with my entries. I can pick entries from hundreds of pips away. And all it is pattern recognition. We are looking for repeatable patterns all the time, and then we are looking for multiple reasons to support the theory of why this is a good place to enter. When it comes to stocks and crypto, it's 70% fundamentals, and particularly with crypto, has it got a real-world reason to exist? Is it faster or smarter or cheaper or revolutionizing what's going on in that space at the moment? And most importantly, is it being used? And if it ticks all of those boxes, then I will go off hunting for entries to buy. Then last time, this is from 2020. So this is the first time Ashley was mentioned in our website. He just joined me as a private student. He was 25 years old at the time. He was working for a big American international company, and they abused the hell out of him throughout COVID. And I said to him, look, you're 25 years old. If you want to stay where you are, I'll see you when you're 50, when your kids have grown up. And because my average client used to be 50 plus, a lot of younger people came to me since COVID because they realized the fragility of their jobs. And also, I think a lot of people decided they don't want to be stuck with this for this time. Anyway, that's when Ashley came to us. Talked about last time the 5 phases of a Forex trader. This article is in our blog, external blog. You can Google it. And here we talk about step one, you don't know what you're doing, unconscious incompetence. Step two, now you realize it's actually really difficult. It's not as easy as all the marketers have said. And usually by this time you've lost some money. Most people will quit. And those who don't now decide they're going to do it properly. Stage 3 is the stage most of us get to. And this stage can take forever. This is where you start you stop losing and you start to do okay, but at the end of the day, you're actually not making any profit. You win a bit, you lose a bit, but at least you've stopped losing. And I say that can take forever. Finally, which is where we want you all to get to, is conscious competence. You don't need sexy indicators. You don't need to be following clowns on YouTube who are pitching the latest wonder system and showing you all their Porsches and Ferraris and Lamborghinis in Dubai. Most of it is BS. I said to you at the beginning, it's just simple support and resistance we are trading. I do filter it with some fundamentals, but that is it. The 5th phase, and I got to this phase years ago. Now it's easy. And guess what? It gets boring. I got bored by about 2008, 2009, which is why I started to teach people. And then 2020, when I had retired from trading for private clients, I was going to stop teaching people. And thankfully I didn't, because during COVID, I would have gone nuts. I was in Spain. We were not allowed to leave the house for 7 weeks other than to walk to the nearest shop. And even if you took your dog for a walk, you had to take the dog's passport and your own passport because the cops behaved like complete. Anyway, so back into Forex Mentor Pro. So I said to you before, the most important page on our website is the start here. And I explained in detail, this is how I went from losing for 3 years. I got to stage 3 by the 2nd year, and I was winning a bit, losing a bit, but not making any money. And I was doing this full time. I'd lost a lot of money, more than 20 grand. And I also spent about 10 grand on courses and fake gurus and super indicators, and it was all nonsense. And then thankfully I found Richard Friesen, who's a trading psychologist, and he managed to sort me out within 6 months. And I explained all of this to you last time. These are the things you need to do. Treat it as a business. Be organized. Keep records. Train like a hobby, pay like a hobby, as one of our members said in 2016. He then went on to trade for a fund, not one of these prop firms now, but a proper firm. This is the 5% club. It used to be said that 90% of people lost 90% of their account in the first 90 days when it came to trading Forex. I don't think it's as bad as that now, but you have to be careful. And the main reason why there's a high failure rate in all new businesses, but particularly in Forex, is because people don't know what they're doing. They throw money in it because they think it looks easy. The marketers tell you it's easy, and off you go. You throw $1,000 in an account, and you've lost the money. The advantage nowadays, of course, you have these funded accounts, but even then you've got to be careful with those. Talked about why you need to keep a journal, talked about money management, all of the above. So this was one of the folks who sent in the business plan. Now, I'm not going to name him unless he wants to be named, but this was a good attempt. So he's talking about to achieve consistent profitability in Forex trading while maintaining a balanced family life. Again, you've got to be really careful in this game, because if you're not careful, it can mentally affect you. And everybody nowadays has got mental health issues, which the older ones amongst us are like, get on with it, because that's what we had to do. But I'll be honest, it was making me ill. And I was stressed to hell. And if you're starting every day full time from a negative position, it wears you out. So this is a good attempt. So he's talking about setting up the platform properly. He's going to follow my strategy, and we're going to cover that a little bit today, but in full detail in the next session. We'll go through all of that. And he's aiming to be on a live funded trading account 6 to 12 months. I think it's at least 6 months if you're completely new. 6 months, but if you've been doing this for a while, you should be able to get onto a prop firm challenge if you get the business plan done and if you get the trading rules, because otherwise you're just going to lose money with the prop challenges as well. And then he's got a plan for 1 to 3 years, and then he's looking at the overview of the markets. Part of what he's looking is mixed in here his trading rules as well, But the main thing is you're just looking at your overall goals. What are you trying to achieve? Smart goals. Set yourself some time limits and say, okay, from today, we're coming into the Christmas period when most traders stop for the holiday period. We are going to focus by end of March. I want to be able to do a prop firm challenge and do it sensibly in a disciplined, structured way, and then move on to the next level. Now, this was a more detailed business plan. This is one of my private clients. Excuse me. And he sent this to me. This was his first attempt in November. And as you see in the comments, he was talking about 12 to 18 months. You don't need to push things out that far ahead in the future. This was one of the points I was making with him. And he was doing, I think he was trying to overthink it. So lots of you haven't done anything, but this gentleman was overthinking everything. So he then came back to me on a refit. And again, I don't expect anybody to get this right the first time. This is an important phase in your life. We are coming up to a new year. All of the problems that have gone on in the world this year, some of which are still going on, but if your financial situation is no better than last year, then do something about it and find a day and sit down and work out what you actually want to achieve. Because most people, they go to school, maybe they go to college, and then when they leave, unless they go into the military or the police force or something that's highly regulated, they kind of they drift. And they end up, I kind of say, it's like a cork on the ocean. They're floating around and they go wherever. And once kids come along, that's it. The next 20 years, your priorities have changed. And it's only then when folks get to 50 odd that they're normally able to start thinking about the future. Well, if you're 20 and sat in this room today, sit down and work out a plan. If you're fed up with what you're doing now and you want to do something about it, then be professional. Otherwise, you are going to just waste your time and effort and money. Now, this is one I mentioned to you last time. I believe there is a free trial of it. This is about $50. It is very good. It's lifetick.com. It's very good at helping you to set up your goals. And it's not just setting goals up for Forex. And again, I glossed over it with one of the business plans there. What the gentleman came back this time was and said, okay, this gentleman works as a tech support, quite high up in tech support, and he earns good money. And I said to him, you cannot quit a $10,000 a month or $20,000 a month job just to go trading within 6 months or a year even. What you need to be thinking of doing is easing your way out of one and easing your way into the other. Now, I trade from weekly and daily charts, mainly predominantly daily charts, and I place the orders and I walk away. I'm not sat in front of a screen all day because I've been there and done that, and I'm far more profitable when I'm at arm's length. But the point then is, what he's now saying is, okay, he's going to start to maybe cut down from his current job and maybe do 4 days a week, have a word with his employer. And if they don't want to play the game, he could get freelance work. But you need to have multiple income streams, not just be reliant on trading. As I said earlier, if you're trading full time and things go wrong and you are trying to dig yourself out of a hole, mentally it is very, very tiring, and it is a lot of stress and pressure. If you rent to pay, mortgages to pay, and especially if you've got kids, then it is very stressful. Now, Ashley mentioned to me this. Ashley bought this Black Friday. I think he said he paid £3 for it. Apparently now, normally it's about £6, but he said this is really good as well as something for to be able to plan what you're going to do, not just for trading, but the whole of the rest of your life. And talking of the rest of your life, I shared this with you last time. This was a gentleman in his 50s, and he, like those of you who didn't do the business plan last time, came back to us 8 years later. He'd paid for it 10 years, 12 years ago, didn't need to pay us again, but he came back and said, this time I'm going to do it properly. I have a meeting with him on Thursday this week, I think, and we're going to now take him to the next level. But he came back and he said, I didn't do the life plan, business plan. Lots of you didn't. He didn't do the trading rules. He didn't do the trading journal. He didn't stick to the routine. And as a result of which, it did not work, which is why I'm shouting and losing my voice now, is I am so passionate about this. You can do this if you do this properly and professionally. But if you just play at it, the probability is that you will not. We shared this with you last time. If you didn't get a copy of it, Ashley will drop the link in the chat box, or I can do it. This is David, the gentleman I've just shown you. This is his journey from where he was to now doing this properly. So you can grab a copy of that and follow it and just do it. In the word of Nike, just do it. And then here, so now I'm not going to go into this in too much detail, but this is all about the trading rules. Excuse me, I just need to cough. So one thing is your business plan. So your life plan and your business plan, what you're trying to achieve, what period of time, and set yourself some SMART goals. Now you need trading rules, and you need to write them down, and you need to have them pinned up in Post-it notes all the way around your screen and written down on bits of paper if need be. And if you're not a member with Mentor Pro, I'm going to leave this on screen and slowly scroll down. You will be able to take notes for this from the recording, or if it will allow you to take a screenshot, take it now. And this was a webinar I hosted in 2018. And I went through and explained what you need to include in your trading rules, write it all down, etc. And it was the same as you guys. So I was shouting at you a bit earlier, but there were 80-odd people in this webinar, live training session within Forex Mentor Pro, and a handful. I said I would review the first 10, and I think in the first 3 or 4 weeks, we got about 4 in. So again, most people are doing this as a hobby, and they're not treating it like a professional, and that's what you need to do. Now, again, this was a very good attempt from one of our members. I don't want you just to blindly copy it, because it's going to partly depend on where you are in the world, what session you trade, and how you trade. But this is a good plan to follow. So you could pinch the bones of this, so it makes it even easier for you. But don't just send this in to me and Ashley, because we'll just fall asleep. I want to see from 3 people, we will review the top 3. I want to see some commitment and some passion, because if you haven't got commitment and passion, you will never succeed at anything. It's that important. So there is a good example of a good set of rules for trading rules. And then the next thing you should have, and everybody should have this, write down a checklist before you take every single trade. Because apart from anything else, what it will do is it will actually help you reduce the amount of losing trades. And we're going to go through that in a moment as well. And one of the things they talk about here is news. Is there any news scheduled? Now, you've all seen these prop firms. We use FX2. Ashley has got an account, I think, with FTMO, and he's tried 5%ers, and various other ones. When these first came out, I was not keen on them because I knew what was happening. I was pitched actually by one of the companies that provided the software for this, and they said it's a great business model because everybody loses. Since then, a lot of these companies have changed their strategy, and I think in part FX2 were one of the ones helped this to come about. Originally, there were lots of rules that were designed to trip you up, and it was a Ponzi scheme in many ways, in that it was all reliant, is the few that got through would get paid out by the people who were losing. And the people who were trying to sell me the software and telling me it was a great business model said it's great because on average, people lose 3 times before they quit. So you just get to make a load of money and everybody loses. I wasn't happy with that from a moral point of view. It used to happen with binary Forex years ago as well. I was pitched by the same company for the same thing, and we took in a lot of money. One of the companies in this space that's no longer here was making 140 grand a month. Now, I am okay with these. This particular company has paid out one of our members 70 grand last year. The other part of it, what I do like is, for you, it's the discipline. And all you need to do is get the cheapest one. Do not, if you don't know what you're doing, don't go off spending a load of money on 100 grand account thinking you're going to be a squillionaire next month, because it's not going to happen. Buy the cheapest one you can get from whoever you decide to buy from. I'm not sure what price FTMO is now, but have a look. But the good thing is it gives you the discipline. When I went to work for a fund, unlike before, when I was managing my own money and I'm a clever guy, I don't need to follow the rules, I don't need a training journal, I don't know the business plan and all the rest of it. When my mentor made me do all that, then going to work for a fund was the best thing ever. Because in a real fund, if you break the rules, you will get fired. Everybody can remember the Nick Leeson case. If you're not familiar, Google it. Nick Leeson, he bankrupted the Queen's Bank, Boots Bank. $800 million he lost because he was using something called a martingale strategy, which basically means that when you lose, you double up on the next bet. That doesn't work either. A lot of robots work on a martingale strategy. If you ever see anything like it, run a mile. But these now do have benefit. The other benefit, if you can do well and progress through the different levels on this and do this for, say, a year, then you have a track record that you can share with potential clients to actually trade real money. So I do think these can be very useful, and therefore it is something for you to consider. Once again, not financial advice, make your own decisions. Then on Twitter, we share things periodically, what we're doing. And this was an interesting article the other day. I remember my father worked in a factory all his life and he hated it. And I read an article when I was 20 and he will have been 45. And it was showing how he, who was working 6 days a week, 12-hour days and earning 25,000, was paying more tax than somebody earning 250,000. Now, I know some of you here today are in the Middle East and you're probably hopefully enjoying a zero tax regime. When I lived in Spain, the tax regime, it wasn't long before you got into 60%. And if you're having 60% of your income being taken away from you, it gets to the point it's not worth working. So that was interesting. The reason I shared this was a picture from last week when I was in Lanzarote. I'm looking at HBAR. This was a crypto that we bought. It went up 300% in 2 weeks. And that day in particular, when I was looking at it and whilst on holiday, it was up 500% in 2 weeks. This was a crypto that had a real world reason to exist, in my opinion. And if I get time, I'll show you why and how I bought it. And also in here, we were showing you the week before that one of our members made her first 1,000% on a stock. And the stock is called MicroStrategy. If you're not familiar with it, it is all tied up with Bitcoin. She got in late. We bought around 32, but she bought in January of this year at $48 and she sold part of it on the 21st of November and she made 1,000%. So the good news, guys, is if you have to go through the chore of the business plan and the trading rules, if you do, as I'm pleading you to do, you give yourself the chance to be profitable in multiple markets. Now, the other thing is if you go on our YouTube channel, there is one of our live training sessions recently. I talked about using logic and join the dots to be a successful trader and investor. And I will share this link with you now in the chat box. And that's what I'm going to be looking at now. We are looking at understanding what's happening around the financial world, which then helps us to choose which Forex pairs to trade and which stocks to be interested in and which crypto to be interested in. Years ago, I went down the rabbit hole of global macro and I got to the point in the end, it was screwing with my mind and I get to the point I wouldn't make a trade. So I don't recommend going down that rabbit hole and taking it so far. But what you do, if you understand a little bit about how the financial world works, you are more likely to be a successful, profitable trader and investor. So that's what that explains. If you get time, make time. Watch that recording. So every day, this is it. For what I do every day, let me get a sip of my tea and just have a little clear of my throat. I'm trying to see where the big money is going. And I am trying to see what the dollar is doing in the scheme of things. And this is the dollar index. The symbol on TradingView and MetaTrader is DXY. And clearly the dollar has been in an uptrend now for months, going back to October. So the bias on a weekly basis is I want to buy the dollar. This is my barometer for what I want to do. But also I'm consciously looking to the left all the time is, well, where's this thing going to stop? Where's it going to run out of steam? And always for this, you need to look to the left to see, well, where did it stop last time? So a year ago, it stopped to the pip at the same level. So when price was coming up here the other week, it was a logical area to be thinking, well, it's probably going to struggle at the very least here and quite probably reject. And then when it rejects, we start to look for, well, if it pulls back, where's it going to go? And for this, we can add Fibonacci. And so if you're looking for a pullback, I start to pay attention with Fibonacci at 50%, and particularly 61.8, and then 78.6 is the final line in the sand for me. So in here, as price came back down, 61.8 was an area of interest to anticipate that the dollar index would bounce. Why is that of any use to me? Well, if that does it, and the dollar Swissy is probably going to bounce, the dollar CAD is probably going to bounce up as well, and then the euro is probably going to bounce down. So on a weekly basis, even on a daily basis, this is what I am paying attention to. Now, it broke the other week and now it's got back within the line. Sometimes you need to adjust the trend line. And if we're going to do the trend line, and again, these are all arbitrary. New people struggle trend line. Well, why did you put it there? You're just trying to put the trend line where you think everybody else is putting it, guys. And then the other thing is on the chart, this freaks people sometimes. I have lines everywhere, but the lines are there again to show me, well, if we get through this area from October last year, where's the next area? Well, here, 107, in fact, let's move that to there, is where it stopped 2 weeks ago and where it stopped in December of 2022. And it was also resistance in July 22 and it was support in August 22. So when it's coming up to these levels, it's probably going to struggle. I look at the NASDAQ. Is money going into the stock market in the US? And it's gone up yet again today as the NASDAQ. But once again, if it was to drop, where would I be thinking that it's likely to bounce? If it's going to bounce anywhere, the best place for me would be to buy this or to get into stocks in the US again on a pullback would be here. Because I have multiple reasons. Previous major support resistance, this was the previous all-time high. This was major resistance, then it became support, 78.6 fib, trend line and the 55 EMA in an uptrend. It's a no-brainer. If it's going to bounce anywhere, it's probably going to bounce there. The other part of the significance is that when money is flowing into stocks, you have a difference in scenarios between what's known as risk-on and risk-off. In a risk-on environment, investors and public are willing to risk, and therefore they're willing to buy riskier assets like crypto and stocks. When they are scared and the markets are scared, then what people do is put money into gold. So you are looking at, are we in a risk on? Are we in a risk off? It used to be that we could be in a risk on environment for months and months and months. Nowadays, it can change within a day, but this is just giving a clue. Money is still flowing into the US stock market. This is the US 30. Now, the US 30 has been dropping. This is the industrial, excluding the FANG stocks, excluding NVIDIA, etc. Once again, if this was to continue to drop any further, and we've now had 10 days in a row of red candles, the area I would anticipate for multiple reasons for this thing to bounce, because it's done it repeatedly in the past, is in here. Again, this is not financial advice, this is not tips, but this is where I am looking for the clues. US 100, again, this is in the last 2 hours, is up yet again. Once again, I've fibbed the latest move, previous support and resistance. So remember, I said earlier, you don't need fancy indicators. You don't need screeners and loads of other things. You just need to use your eyes, common sense, and join the dots. I then have a look at the US Treasury bills. So this is the amount of money that the US government are having to pay to get other countries and funds to lend them money, because the whole world runs on debt. In the summer, they were having to pay over 5%. Then it dropped. Trump got back in again. Now it's making a move back up again. And the 10-year note is starting to get, and this is bad for the US economy in the new year if this continues, because it means more of the tax revenue that they're bringing in is having to go pay interest on the debt, which reduces the amount of money they've got. Now, NVIDIA, if you missed NVIDIA, and I missed it this year, I have made a lot of money on MicroStrategy and gold and silver and crypto. I missed this one. Okay, I missed it. But at the moment, the Chinese are investigating whether NVIDIA have done something that breaks the rule. It's probably tit for tat because of Trump threatening with the tariffs. But again, you're looking for, well, if it drops, where might I be interested to buy? And I only buy a stock if it has the potential to make at least 25% in a short space of time. So any less than that, I'm not interested. And with crypto, it's 35%. So the first place I start to be interested is 125, but we're not going to get that. So my main area of interest is down here. And then if we drop further, I would be looking at 100. Again, I'm not saying I'm going to buy it, but if I wanted to buy it, that would be the area I would start to think. Gold, I said to you earlier, if we're in a risk-off environment, then gold usually will go down. It's been bizarre. I mean, since Trump got into power or has been re-elected, we had the other way, everything was up. Gold was up, stocks was up, crypto was up. And then the following day, it was all back down again. I do hold some gold, and I'm not going to sell it. Sometimes at the end of the year, the big funds will force the price down for their profit taking because they're generally short gold and especially silver. But I use a company in the UK called Bullion Vault. The gold never leaves the vault. It's in Switzerland. It's audited every day. But I do have some gold in case everything collapses. Gold this year had an extremely good year. And again, this was based on my M2. And this I shared with Forex Mentor Pro members back in 2023 when I was buying gold at 1820, which was in here. This was a breakout and a pullback. Same system, same strategy. So Bitcoin, woohoo! I got involved in Bitcoin in March. Well, actually, I bought my first Bitcoin in February of 2020 at $8,000. And 3 weeks later, the COVID crash saw it crash all the way to $4,000. But I was then buying aggressively, and I took the beta testers from May 2020 when it was 8,000. And then I did a presentation in the October of 2020. And again, it's in our YouTube channel where I explained why I thought that crypto could be the best investment in your life. And boy, has that been the case, but boy, is it wild right. And the main thing is, as I said, showed you with the Twitter X post with the lady with the stock, at least if you've been in this since last time and you've suffered through all the pain, at least get your initial stake out or consider getting your initial stake out and take some profit. Because at some point, this is going to go the other way, and usually it is quite severe. Now, Ethereum is even better technically at the moment. Bitcoin is in no man's land. We've never been there before, and therefore, you can look at fib extensions for where it's going to go next. Ethereum back at 4,080, 4,090, where it was in March. It was at 4,850, 4,900 3 years ago. So technically, it has the potential, if it can get through 4,000, to get to there. Personally, if it gets to there, I will sell some of my Ethereum. Although what I have got is all bought and paid for. And then this is XRP. Those of you in the crypto world will be familiar with it. The SEC under Gary Gensler, under the Democrats, tried to kill crypto. I explained in the summer to my lot why I was buying around 40 and 50 cents in this consolidation area. But I did explain it was a punt. It was a guess that they eventually would win. Now, as it is now, it is up from the summer 400%. So when you get crazy gains like this, just be careful because everybody thinks it's going to keep going. But the previous high on this was 195. There is a lot of talk on Twitter and on YouTube that this is going to go to $10, and it might. But at the very least, all of mine now is bought and paid for. I have taken out the initial stake, and I took some profit out the other day as well when we got in around 240, 250, where it is now. Something to consider. This is MicroStrategy. I showed you this last time. I got in initially, showed you where the lady member had got in at 40 odd. I think she got in here. We were in initially on a break of a trend line, a 55 EMA down at 32, 33. And I showed you how I took some profit and got back in again. And then that lady on X, I sent a telegram out, and it's so rare, guys. I mean, this is once in a blue moon that you would do this. I actually sent a telegram message to say that I was taking big profit out of MicroStrategy at 541, I think it was. She got out at 537, and that was the top for this. And again, there were some fundamental reasons to support the theory. Came back down to 78.6 fib in an uptrend. Coinbase, broker in America. Again, I was buying it in the summer at 150 and 180. It's now doubled. And once again, I'm interested on a pullback at 285, and I have levels set further down. So all of this is on a daily basis. I am looking to see where the big money is flowing and whether or not people are willing to take a risk or not. Then you need to go into Forex Factory or similar calendar and see what news is coming out. Because remember, I said earlier, you might find the best setup going, but if there is big news on the Monday or the Tuesday that could kill it, then you need to pay attention. And this is why you have a checklist. So the Aussie dollar, often their big news is on a Tuesday early morning, UK time. So if I've got a really good setup on the AUD, and I take it on Sunday night, I only have 24 hours to make my profit. So I will wait until the news comes out. And obviously this week, the big event pre-Christmas, before the big boys go on holiday, is the FOMC statement. What they're going to do with the rates, it's factored in. Everybody's expecting 4.5%. They don't raise rates, that will have an impact. If they do cut rates to this level and then they say something different in the press conference. So when it comes out, wait until after the press conference and all the silliness and all the crazy bumping up and down that goes on. Personally, I usually wait until London before I will take a trade after FOMC, because the London market is shut when it comes out. So pay attention to the calendars. So the Wall Street Journal, if you're American, you might not believe it, but for those of us from the other side of the pond looking in, it appears that the business community under Trump are expecting things to get much better, and there is a lot of positivity from a business perspective. If you then have a look at what's happening around the rest of the world, so we see the dollar index. The dollar index says we want to be buying the dollar. Does the fundamentals support it? Well, France is in a mess, and they've just had their credit rating downgraded, and France is the second biggest economy in the Eurozone. And that's going to have an impact on the bond market, means they're going to have to pay more money to borrow money. And that's what broke Greece 10 years ago. And then if you look at Germany, so Germany and the UK got a new government. They're actually unbelievably worse than the last lot. And now the UK economy is going backwards, not good for the pound. So pound weakness we expect. Germany today, the current boss, chancellor, has lost the vote, so they're going to go for early elections. The suspicion is a more right-wing party is going to get in, which leads to uncertainty. And then you've got Canada, Mr. Trudeau, very unpopular leader, and his finance minister has quit today, and she's not happy with what's going on as well. Not good for the Canadian dollar. And last time, I believe, I showed you this. This is Australia. This is what they do. Their biggest export is coal briquettes, which is used in power stations. And their second biggest export is iron ore. So if the price of these two commodities goes down, not good for Australia. And I mentioned last time and explained, 29% of their exports goes to China. And what I was saying is, if anything kicks off in Taiwan or with the economy in China, is not going to be good for Australia. So this is news from the Financial Times today. The central bank have lowered their forecast for how much money they're going to get in on tax this year, because the Chinese economy, bear in mind, 29% of the exports go to China. If China is going to go into recession, going to buy less stuff, not good for the Aussie dollar. So the bias is to sell the Australian dollar. And then on top of which, China is doing naval exercises again near Taiwan. Politically, if China invades Taiwan, Australia economically is screwed. Then, all positive for the dollar. Okay, we just want to put money into the dollar and we want to sell the other currencies, but also be mindful of the fact that the US stock market, I've just shown you, is still going up and up and up, but there are warning signs that we could be on, for at the very least, a pullback. Buffett sold the majority of his Apple stock. He sat on $325 billion in cash, so he's waiting for a move down. And then there's lots of talk from commentators about it's a bubble and it's going to burst, and that could affect and will affect crypto as well. This guy runs a big fund that's made a lot of money from the big seven, but now has sold all, I think, of his stock. This was the ebook. We gave you the link for this last time. If you want a copy, then you can get that. This is YouTube. So I'm going to show you now what I do on a daily basis technically. I've only got 10 minutes left, so I'm going to go through this in full in the next session. However, if you would like to go through and be prepared for that, then go to our YouTube channel. It's just YouTube at Marc Walton. And again, I'll put that in here. If you go into here, there's lots of examples of how we pre-plan our trades and lots of results here. And we share this with members in advance. But again, the goal is for them to learn to be able to do this for themselves. So if you want to prepare for the next session, then find the time and go through some of these videos. So let's go now to Forex charts. So this is MetaTrader 4. I still like MT4, even though I use Tickmill for analysis, because I find the charts are a bit cleaner, and I've been looking at them for 20 years. But again, you can see here the US 50 is clearly in an uptrend. It's actually in an up channel, which is the same thing for Forex as it is for stocks and everything else. So it's going up. So selling up here is risky because you are selling when the rest of the world is buying. What the thinking is, well, if it drops, where's it probably going to react? And if you look in here, you can see that this area here was previous major support and resistance. It's the intersection of the trend line. It's 50% fib, and there's a 55 EMA. So my thinking is if this drops, if it's going to bounce anywhere, it's probably going to bounce there. And that's what I'm doing all the time. So then with the DAX, the dollar index from the summer until September was in a clear down channel. So we wanted to sell on a pullback, you get the picture. Then it broke through. When it broke out, my suspicion was, and I said to members, is look, I think it's going to struggle at the 200 EMA, which it did for a week. And then when it got through, resistance becomes support. And then when it got through again, resistance becomes support. And then as I showed you earlier, I looked to the left to think, well, where is it probably going to stop? And you use that information for profit taking overall, and you also use that information for not buying now because the probability is against you. So if we're using the DAXI, the dollar index, as a barometer, and the bias is to buy, then what we're going to be looking for is if the dollar index pulls back down, from the current position now, I would fib just this little bit of a move. If it's to pull back into here, 106, 105.70, I'm going to be watching the Swissy. And the dollar Swissy, the other week, we caught a nice trade on this because of the dollar index. The dollar index was pulled back, I think it pulled back into here. And we use that to help us to take a trade on the dollar in Swissy. And what I do is I look at the weekly every week first to see direction. So this was easy before because clearly we were in a downtrend there. We wanted to sell. Then we were going up. We wanted to buy. Up, we want to buy. And once again now, the bias at the minute is we want to buy. We think it's probably going to struggle up here. So we might consider a counter trend short here. But we are interested to buy in here around 88.30 now. But I don't have multiple reasons, but I do have 2 or 3. If I go down to the daily, I can see now in this area here, 88.20, 88.30, I could fib this, as I've just done there. Let's fib this on the daily. I could put a trend line in. So the trend line, and again, you're trying to make the trend line fit, but I put the trend line in here as well. And I say, okay, if the dollar index drops and the dollar Swissy drops here, I can enter here at 88.25, let's say, put my stop down here below the 78.6 fib, below the 55 EMA, below the 200 EMA, below the trend line. So I'm risking 55. And the potential for this is to make at least twice the risk. If I can't make twice the risk, I won't take it. What I will do with this, if it comes down and gets me in, I will be taking off half of the profit here, moving the stop into here and leaving the balance to run, hopefully, the full way. And again, I'll cover that in the full session next time, which is all about technicals. So there's no fundamentals. There's no having to do anything. I will just show you in real time what I am looking to do that particular week. Now, if the Swiss is going up, the euro goes down 95% of the time, 90 to 95% of the time. So you never long the Swissy at the same time as shorting the euro, because ultimately it's the same bet. Equally with this one, I don't have multiple reasons to support the trade. I do have previous support and resistance and the whole number and the trend, but I have more reasons here to take that trade. And then we've just seen the Aussie economy not in a good place. Start on a weekly. Is it going up? Is it going down? Is it going sideways? Clearly it's going down. So the bias is I want to sell. However, I don't want to sell it where it is now because, again, zoom out and have a look. Last time it came into here, it has repeatedly bounced from this area on a weekly. That one tried, and here in 2020 it was resistance for 3 weeks, then it became support. So the probability at the moment, if you were to short this now, the probability of this getting through is not as great as it going back up again. And equally, if you take the trade on here now, where are you going to put the stop? You'd have to go under here, which is 95 pips away. And that's only one reason. This is when you end up panicking because there's nothing else really to hold this up. So what we would be more interested is if this was to pull back up. First place of interest would be here, around 66. And whole numbers are important these days. And up at the top around 6,800. So on a daily, we have a look. We're in a clear down channel. Breakout down, pull back. Breakout down, pull back. Breakout down, pull back. Again, this area here, we don't want to play because the probability is against us. And really here, unless I go down to a 4-hour, it's not likely to happen. Another thing here, there was a clue that this was going to bounce back up again. So again, get in the habit. Look for clues all the time. This is MACD divergence. The lower low here and a higher low here. This was telling us that this was probably going to go back up again. So again, get in the habit, join the dots, build a picture up, and see what the implications of everything are. This is the pound. We just had a look at the pound. Jobless figures bad, growth bad, new government rubbish, things not looking great in the British economy. We're in a clear downtrend. We go to, and we can see we've broken all the EMAs, which are major support and resistance. We go down to the daily and we say, okay, if I was to short in here at 127.50, put my stop here, which I'm pushing it now because I don't like to go more than 75, but in theory, I could make 250. However, be a little bit careful with this one because, and again, this is zoom out and have a look, what could go wrong? Here is a weekly trend line that goes back for a year. So if I get in here with a 75 pip stop, don't be thinking this is going to go all the way because it's probably going to struggle in here. So once again, helping you hopefully to try to avoid potential losing trades. NZD correlated with the Aussie dollar. It's doing the same thing as the Aussie dollar. It's bouncing repeatedly off the same area. We don't want to play. Big area of interest up here. The safest area for me would be up here. And then you get people saying, well, this bloke's mad. It's 500 pips away. It's never going to get there. Believe me, Forex surprises all the time. And if not, I'm going to wait. I'm not in a rush. We are paid to wait. This is the USD CAD. We've seen the CAD economy is weak. We've seen that the dollar economy is perceived to be good and the dollar is climbing. Don't want to buy it up here because I'm just guessing and I have nowhere to place the stop. And looking to the left, it has struggled here in the past. So I'm not going to play here. I want it to pull back. If I go down to the daily, there's also a clue here, right? Another reason I don't want to go long. There's two big clues here. If this candlestick closes like this today, that is a reversal candle at the top of a move. This is MACD divergence, suggesting at the very least it's going to pull back. Dollar yen, we had clear move up. So in this move, we just wanted to buy. Then we had the breakdown. So there we wanted to sell. Now we're looking again and saying, okay, broken the all-important 150, broken the EMAs. Our bias is to buy on a pullback once again. And anywhere into EMAs and trend lines and Fibonacci is where I am interested. Final thing to wrap it up is for today, be careful when lots of things come at once, and especially the yens. The yens can go weeks when there's no real opportunities, and then we have loads all come at once. And again, this goes back to the checklist. Check the news. Is there Aussie news coming out that could screw with the Aussie dollar trade but won't affect the New Zealand dollar yen? And again, look at the potential risk reward. Which one is giving you the best potential reward versus the risk? Because going back to the first session, everything is to do with risk management. Once again, in here, I would be interested. I've only just got back today and I haven't looked at a chart because I've not been very well for the last week and I was supposed to be on holiday anyway. But that does interest me in here. Again, not a tip, not advice. I would need to have a chat with Ashley and see what his thinking is. But in here, pushing it. But clearly, this was a range and a major area. So in here, maybe on a 4-hour, I might be interested to short this pair. So again, join the dots, look for clues. And if lots of them come at once, then decide which one to take. Right, quickly, before I go, my voice has managed to last all the way through. Where can I see a copy of the business plan Marc displayed as well as a copy of the checklist? If you email Ashley, if you could type your email address in, we'll send you a screenshot. So if anybody would like a copy of the business plan and or the trading rules and you're not a member of Forex Mentor Pro, email Ashley and he will send you a screenshot. I just need to get extra, make sure that the member is happy to share. I have checked with one of them already. The ebook, let me get you a copy of the ebook again if you missed it last time. Where's all my list gone? Here we go. Had it somewhere up here. Here we go. So this is an ebook I wrote a few years ago. Since then, I've stopped using a lot of the EMAs. So I've just shown it. I only use the 55 and the 200. The password for this ebook is cable, which those of you in the know will know that that's the nickname for the British pound because of the cable that connects the New York to the US. Also, if you're looking for ideas of what we do and how we do it, we do also explain it on our Twitter feed. Just let me see if there were any other questions going back in here. Ed was saying, are any prop firms in the USA reliable? I don't know, to be honest, Ed. Elijah, I don't know. Somebody did mention the other week. Ask Ashley in the forum tomorrow. We'll find out. Right, I think you've all got that now. Right, apologies for the chaos at the beginning, guys. As I say, I couldn't get into Zoom, and thankfully my voice has held out. So thank you one and all for staying. I hope you enjoyed the session. If you enjoy it, then please tell to Tickmill that you enjoyed it and you'd like more. And if you didn't enjoy it, then just keep it to yourself. And for next time, try to do the business plan and the trading rules. If you want to do this properly, this is a profession and you need to treat it like a profession, because if you just keep playing at it, you will lose money. Okay, you're welcome. Thank you very much. Says he enjoyed it. Great webinar. Says, I'm in. Good job, says Abe. And Samson, very much. Abe, Samson says, we love you. Thank you. We did enjoy. Thank you. Great. Thank you, one and all. I am pleased that you got something out of the session. Next time is the sexy stuff. Again, at the start of the year, I do a webinar for members of Forex Mentor Pro, and it's my predictions for the year ahead. And my predictions for last year were pretty spookily accurate. I spoke about Bitcoin, and I think I mentioned it could go to 100K. It was around 25, I think, at the time. Spoke about gold, why I was getting more into gold. It was 1900. So if you email Ashley, we will invite you to what is normally a members only session, and I will be explaining what I'm planning to do for the year ahead. And it's all about planning is this game, guys. It's all about planning. It's 90% planning and 10% execution. You're welcome along. Okay, great. Okay, thank you all, one and all. And Tickmill is supposed to put a replay out for you guys. So I need to talk to them now that I'm back. Thank you, one and all. Thank you, Ashley, for helping. Catch you all. See you later. Goodbye.